a big week in the markets with Trump tariffs eyed as well as non-farm payroll. So we're expecting an explosive week with regards to market movements. Ken Chigbo back with another E8's market fundamental update. This one's going to be good. Let's jump straight into this. Guys, wow. Have your seatbelts fastened. This is an interesting week now. April 2nd, we do have the expected Trump tariffs being announced. Okay, all the details around these. And let's just put it into a nutshell, first of all. The reason why Trump is doing this, from my great understanding, is, look, he isn't happy with the deficit that the United States has on a trading level with its trading partners. So what does that mean? It means that the United States is buying a lot more from these guys, from the likes of Canada, Mexico, Japan, EU. They're buying a lot more, but they're not getting much back. You know, these guys aren't buying much of US goods. So Trump wants to narrow that deficit. He would love, obviously, a surplus. But that's why he's introducing these tariffs, so that he can try and get the US back in power somewhat on the trading front, so it has more power. So instead, these guys are buying more than the US are buying from them. Does that make sense? So that would narrow that deficit. And ultimately, of course, these guys, the United States, Trump wants a trading surplus. So expect a lot of volatility. Now, as we know, we spoke about it weeks ago where we had that massive dollar downside. And I was talking to you about the narrative that the markets were running, where Trump was making the US effectively uninvestable. So we've seen the dollar sell off. We're seeing US stocks sell off because of fears that Trump's making it uninvestable. And it was a fact, because we were seeing big outflows from US stocks. We were seeing big outflows from the United States and into, the likes of European stocks, Chinese stocks. So people were coming out. The investors are worried because of all the question marks, as I said before, that it leaves on the US economy. Now, how does a dollar fit into all this at the moment? Now, the dollar's definitely vulnerable again, guys. Obviously, I said last week how we staged a rebound, finished in the green there, but now we are back into suspect territory. The reason being, obviously, we didn't really follow up with some big buying momentum this week, despite, certain data points being okay. But the dollar just unable to sustain it. And I certainly believe that it comes down to this, the tariff situation. Markets cautious heading into that. And does the US really win, regardless of if the tariffs are good, if the tariffs are bad? Because if they're not as bad as feared, then risk assets going to rally. Dollar will come under pressure. If they are bad, then dollar's just going to sell off anyway, because markets are like, this is not great for the US economy either way. So with the dollar, obviously, not great there weekly. And this is what worries me for the dollar. Okay, saying worries, like it doesn't really matter. We trade what we see. But this is the thing where we've formed a potential bearish channel, a rising channel, bearish flag, and we've broken out of that now. And ultimately, when you pay attention to structure, we've been largely to the downside. Okay, and now obviously after this period of consolidation, it's pulled back after this keep touching this key zone at the mid 103 region. We're back in selling. And I just want your attention on the monthly moment. Look at that. Reversal doji validated with that selling in February and that closure in February below. And then in March, big selling, obviously, so far. And the way this candles is, it doesn't look like we're going to be stopping selling anytime soon. We're going to be set for some more selling in April. So dollar vulnerability is certainly back in play after that little pullback. Now, this week, obviously, all eyes on non-farm payrolls. Okay, it's labor market data week. It's expected to cool. Generally speaking, we have seen labour market figures cooling slightly. Okay, you can see that last couple of months been cooling, previous revised lower as well. Unemployment rate has ticked higher when you look here as well. We're gradually just cooling. Okay, nothing drastic, but gradually cooling in the labour market. And we're expected to see how we've had the Doge cuts. Okay, so federal jobs are being cut, those potentially being filtered through. We're expected to see a lower number here. So this wouldn't obviously help the dollar's case, and markets, of course, will ramp up rate cut pricing, rate cut bets. But ahead of that, obviously, we do have the tariffs. And as I say, I can't see the scenario where the dollar wins right now, especially where markets are really uncertain and taking their funds out of the United States because of all the question marks it leaves on the US economy. So all eyes on this. And as I say, it doesn't look good for the dollar right now. There's certainly some vulnerabilities running into supply ahead of 105, and now looks subject to retreat back towards that zone where we staged the rebound, sort of 103.50, 103.00. The euro, volatility expected here because, of course, the tariffs do also affect Europe. Okay, now we already saw late last week, Trump announcing those potential tariffs, 25% on autos. There's so many tariffs. I'm sure you guys are like, man, how do I keep track of all this? It's been ridiculous. But obviously Europe are quite a large exporter, particularly of cars to the US. So obviously these potential tariffs do have an impact. But surprisingly, on that initial announcement from Trump, the euro in itself didn't really react much. It was more so stocks, okay, German stocks, DAX, okay, because obviously we've got big car makers there, Volkswagen, Daimler, Mercedes. There's decent car makers there. However, it was eventually sort of shrugged off. I guess markets just waiting for real explicit details and actual implementation of tariffs, because obviously there's been a lot of flexing of muscles from Trump without actually doing things. You know, he just wants to, bargain a lot of buying, or sort of basically just have a lot of power at the negotiating table effectively, and he's trying to scaremonger people, but people taking a pinch of salt and it's backfiring on him anyway. If we look at euro, obviously outside of tariffs, focus on inflation expected to cool in Germany and the eurozone, which wouldn't necessarily be a bad thing. I can't really see it being euro negative. Obviously when we get closer toward rate cuts, obviously it's a negative for a respective currency. However, where we've been in this sort of stagflation narrative for the eurozone, where growth's been low, prices have been high, the fact the price is coming down now is not really necessarily a bad thing, because we've had this sort of stagflation scenario. I hope that sort of makes sense to you. Now, when we look at euro, obviously for the flip side of Dixie, big bullish engulfing here on the monthly, massive performance there. We're not set for any slowdown right now, the way that monthly is. Look at it. Then obviously on the weekly, we staged a rebound, after that rejection there in that mid 109 region, staged a rebound, look for some further buying pressure. On the daily, we had this descending wedge. We can view that as a nice big bull flag potentially there. We broke out there on Thursday with some further buying on Friday. You can see where there's some near-term resistance here, sort of 108.20, 25 area. We need to break out retests, and then we're going to have a run in towards this sort of mid 109 region. For me, obviously, depending on how we deal with this supply area here, as long as we get comfortable and it holds, we can run in towards 110. If we look left here, similar sort of thing happened there. Look, rejection in the psychological 109.50 zone, pull back around the current territory where we're at now, and then big buying momentum. Now, euro looks attractive across other peers as well, just using that as a base case. We look at likes of Euro Aussie, Euro CAD, and the reason being is, look, yes, these tariffs obviously potentially affect Europe, but they also affect Australia, tariffs there, Canada, and it's like a double whammy of certain economies like Canada and Australia. Why? Because it's not just tariffs directly on their economy, it's also indirectly, with China. China is the biggest two-way trading partner for Australia and New Zealand, but also China is a massive commodity consumer. So if China is affected by tariffs, right, quite largely on the economy, they have to make cutbacks. And one of the first things they make cutbacks on is commodity purchases. And obviously Canada is a massive commodity linked economy because they're a massive oil exporter. So you have to think like that. And Europe, obviously, the tariffs will affect them, but not on a double whammy level like the likes of Australia and Canada, if that makes sense. Okay, so I do still like Euro holding ground this week versus its peers. The dollar volatility expected here because we do have the RBA, so the central bank rate decision, where they're expected to keep rates unchanged at 4.1%, as you can see here. And look, I'm expecting, if you just put this in a nutshell, I'm expecting for their stance. Remember how last month they had a hawkish cut where they cut rates, but they were like, look, rates aren't going anywhere for a while. I think we should see a pivot this time around and expect a dovish tilt from the central bank. Why? Because look, I'm just going to show you facts. Remember, numbers don't lie. Look, last week we had softer inflation. Inflation's cooling down to 2.5%, so moving in the right direction, closer towards their 2% mandate. Look, the week before that, labor market's softening, okay? And this is one of their key worries, that labor market's bullish, and the fact that it was inflationary. If we've got a good solid labor force, then it's more people out spending money and keeping price of goods and services sticky. But look at the employment change, minus 52.8 thousand jobs, and the previous was revised down from 44K down to 30.5 thousand. So worsening there in the labor market, which gets these guys ready to start softening their tone. So I'm expecting a dovish hold here from the central bank. You never know, they could surprise and cut rates, but I doubt that, but you never know. But I'm at least looking for them to turn dovish. Aussie dollar's vulnerable versus certain peers, as I said, versus the euro. I do see it as vulnerable, and potentially GBP as well. But when we look at Aussie dollar here, it's a bit of a tricky one to trade because obviously dollar remains vulnerable as well. But if you decide on which way to go, you'd lean towards Aussie downside. But we've been moving in this channel, waiting for that breakout and retest. And once we do get that, this should sort of clearly head to the downside. Look, in terms of the monthly, you can see it's not as bullish as the likes of euro because, as I say, that double whammy aspect where tariffs are going to hurt Australia directly and indirectly. But yeah, as I say, there are certain pairs that I like the looks of when you look for, if we're talking about Aussie, I like the looks of Euro Aussie. Okay, right now we've formed a potential bull flag here. I like the looks of Euro Aussie. I like the looks of GBP Aussie as well. We just need to clear this heavy supply around 206.00. Once we clear this, we've broken out a bit of a flag there as well. I'd like to see some buying pressure. So keep locked in on this, obviously, of course, on tariffs for April 2nd, but then also on the RBA where they are expected to cut rate. Where they are expected to hint at cutting rates at the next decision. Canadian dollar volatility, of course, expected here, obviously with all this tariff situation, but we also do have key labor market data as well. Now, interestingly, data's been picking up the last few sort of key data points, the likes of inflation. Look, if you look here, firstly, GDP picked up higher than expected, 0.4%. Okay, previous revised higher. The week before that, inflation was sticky. Okay, which is not the best of things because we're still seeing low growth in Canada. Retail sales spending, generally speaking, not bad numbers. Previous revised higher. But either way, Canadian economy is cooling, as we know, because the Bank of Canada have been cutting rates as well with that cooling economy. But obviously, all eyes on these tariffs to see the implications there. How because obviously CAD, we know how sensitive it has been to tariff headlines. So this is going to be, of course, fireworks for that. But obviously, if we see these tariffs being implemented, if we see poor jobs data, either way, poor jobs data is going to tee up CAD for some weakness. CAD remains vulnerable anyway. When you look at the likes of, let's just look here. Obviously, we'll talk about dollar CAD in a moment, but when you look at GP CAD, okay, a big bull flag there forming. When you look at Euro CAD, bull flag there, which you're looking to break out of and continue to push the upside, and some big monthly performances there. Euro CAD, GP CAD, big monthly performances there. So it does remain vulnerable against certain peers. Dollar, obviously, an element of caution given this tariff situation, because as I say, the dollar isn't really a massive winner on the back of this either. But price action just sort of really ranging in the past sort of few weeks. And I just wouldn't like to sort of side with dollar CAD right now, given obviously the situation of dollar vulnerabilities and also Canadian dollar vulnerabilities. But let's keep an eye on these labor market figures. So guys, a massive week, right? Massive one. Plenty of volatility across the markets. I don't know how big April 2nd is going to be in terms of market movements, but be prepared. Either way, be prepared. Let's have our finger on the pulse and ready to put ourselves in a good position. Other than that, have an amazing and a blessed week, and I'll catch you on the next video.